Is it indeed some of the daily active user numbers, despite maybe the actual top line numbers from an income sheet that gives some relief here?
Yeah, and also their ad impressions grew 15%. So that actually beat consensus numbers. So the reason why they missed the numbers is because the ad pricing declined 8%, but the impressions grew 15%. And that's a sign that they are holding on to the engagement. So we know Facebook was making this pivot from, the feed base to more videos, the Meta Reels and the Instagram Reels, and that has a lower ad pricing. So we kind of expected going into the quarter that ad pricing would be down, but ad impressions holding up is a real positive. And also they are scaling back their guide for the total OpEx.
Yeah.
So that is a sign that they're not betting as big into Reality Labs as they laid out last quarter. So that's a good thing as well.
Well, what about the cost, though? I mean, because we talk a lot about the money that they're going to spend for some of these future initiatives. That doesn't seem to be a concern, at least right now, in the knee-jerk reaction by investors.
Yes, and look, they were losing about $10 billion on Reality Labs. At least that was the number last quarter. It's very similar this quarter. But what they're telling us is they don't plan to increase it. Okay. So that's a good thing, as well as the CapEx. They were spending additional $10 billion on building the infrastructure for the metaverse. Guess what? That's not going up. And a lot was already priced into the valuation. Look, coming into the quarter, Facebook was at its lowest valuation multiple it's ever been. So this is sort of a relief that, expense isn't growing, the CapEx isn't growing, and the engagement is holding up.
Hey, Mandeep, it's Carol here. So what changed dramatically from that big disappointment in the previous quarter, right, when the stock just fell like a rock? What's changed?
Well, what's changed is last time they gave us a surprise that they are spending an additional, $20 billion, $10 billion in CapEx and $10 billion in OpEx on this Reality Labs. That's the first time we learned about those numbers. This time around, they're saying they don't plan to increase it, but they plan to pare back a little bit. And the core Facebook and Instagram engagement seems to be holding up quite well. So I think these are definitely good numbers. They missed on the top line, but we know it's because of the ad pricing. And I think that was sort of expected.
Mandeep, 43% operating margin this time last year, 31% this year. Is that the new normal for Meta?
For a while. So that's where the Reality Labs $10 billion loss comes into play. That's what's eating into the operating margin. But the core business, the Instagram and even Core Blue app, despite the lower engagement, continues to be above 40% in terms of the margin.
Just real quickly, is there a broader sort of metaverse trade here? Because, I mean, we had Qualcomm earnings out. They're doing well here. And I know there's been some talk that it's not just, the content creators like a Facebook, like a Meta that benefit from this, but it's chip makers as well.
Yes. So the metaverse trade is more on the infrastructure side. If you're exposed to infrastructure investments tied to metaverse, you may do well. Yeah. But in terms of applications like Roblox or anything else, you are being hurt by reopenings right now.